Good morning. It is Tuesday, July 30th. I will be on Spaces today at 3 o'clock, and I will be talking about Microsoft. I think we're going to hold on until Microsoft earnings are on there. I don't know. I'll be on there with Wolf or Stocks on Spaces. I don't know who. Follow me on Twitter if you want to see that stuff. I went online yesterday and kind of, just talked about me buying Microsoft. I did buy Microsoft yesterday. I'll go over why I bought Microsoft. I'll go over the implied moves of Apple, Microsoft, Amazon, and Meta based on the options market. We'll go over Apple. Stephanie Link trimmed it and why she trimmed it, and Apple signaling that they use Google chips. We'll go over AI, how hedge funds are playing all of this, and earnings. There was an alpha pick yesterday that killed it on earnings, up 15, almost 20%. Just on the day, they're up 35% in just over a month since they picked it. I'm not supposed to bring it up, but I will bring it up. PayPal killed on earnings, up 7%. And a difference, Merck beat and raised, they went down. Pfizer beat and raised, and they went up. Just an example of, hey, what the price behavior have. So we'll take a look at the charts, and then we'll look at crypto, because what happened with crypto, and there's a big signal in crypto as to the bullishness of Bitcoin. So if you're interested, hang on. We'll go over this. Just so you know, Spaces at 3 p.m. today. Follow me on Twitter. I talked about it just a little bit ago, like 10 seconds ago. Microsoft, I bought more. I bought a lot more, and I bought it about 428, and I put it out on Savvy Trader. Savvy Trader is where I have my trading portfolio. It's where I have the core portfolio. You can follow any of my portfolios. Just go over there, savvytrader.com/daily stock pick, or go to the link tree. It's down here on Linktree. Savvy Trader, follow all my trades for free. Now, this one is a paid one. So if you want to follow my trades, you're going to have to pay for this one. But I will tell you, this one purchased 10 shares at 428. And here are the reasons. There's 5 main reasons. 1, it's a long-term buy and hold. 2, it's a top 5 position in my portfolio. So even if this goes down by the implied move of 5%, I'm still fine. The average Wall Street price target is 498. That's 16% above. They will be chasing it. I'll go over that. The algorithm will get you in the name tomorrow, or the afternoon candle. We'll take a look at that. I have a very large position in my brokerage account. So this is the final, and this is probably the most important. I know I added this one as the last one, but I have a very large position in my brokerage account. I don't have as large a position in my retirement account. I want to change that. So I needed more exposure in my retirement account, even though the overall portfolio, and we'll go over why Stephanie Link sold Apple, but even though in my overall portfolio, this is a very large holding, it's not in my retirement account. So I was out of whack there, where I actually want to hold a little bit more. So am I trimming it in my brokerage account? Over time, I will, because my lifestyle is I don't work. And so when I need money, I need to sell some stocks. Well, what am I going to sell? I'm going to sell probably some of the top 5 holdings. And again, we'll go over Stephanie Link's portfolio management, why she sold Apple. So I got 20 shares of it. 20, even though I only put 10 shares on here. I made about 25. I forget the exact number. It was a significant buy, and I just bought it all. And so, let's look at the Qs first. We'll go over that. The Qs right now, you are still out as far as the algorithm goes. You are still below the 9-day, and you are still with trending down on the 50-day. You are still trending up on the 200-day. You're using that 200-day as your support. I would look, if you break 455, I'm going to be out of town tomorrow, Thursday, and Friday. So I want you to keep this in mind. This is the number one thing. If you break 455 and you close below 455 on the Qs, that will be a signal that we've got a problem. And that will be a signal that there probably is more downside to go. Because when you look at the Qs right now, if we trade sideways, most likely this MACD is going to cross up, and the algorithm will probably get you back in, and it will signal you. So all you Trendspider holders out there who have my algorithm, keep an eye on this. And set your horizontal lines. Put a big yellow button at that 200-day and keep moving it. Now, this 450 right here, 449, that's the previous high that served as some resistance before, but it buttered right through it. Then it broke down. That's support. You only see a couple of candles below that. That remained support. So if we break down below 450, then you've got to look at these averages down here at 420. Now, I'm not saying this is going to happen, but again, we've got a big week of earnings. Microsoft is going to kick off the big mega earnings this week. And I think if that's the case and you're watching this, I would be concerned if we break 450 on this. If you continue to stay above 455, I think you're fine. I think you're fine. Am I going to sell even if we get below 450? No, I will be looking probably to buy more, but I will be buying into strength. I got a message from a subscriber yesterday, and this is a great lesson. I got a message from a subscriber who said, hey, I bought immediately and lost 5% in half a day. What should I do? Well, here's what I said. I said, when you bought the stock, what was your timeline? What chart did you look at? Was it a 4-hour? Was it a 5-minute? How long did you want to hold it? What made you buy the stock? And if you're down, what was the price you said you would sell before you bought it? And why did you buy the stock? What is the investment thesis in that trade? So if it's a trade or an investment, that's your first thing. If this was a trade and you're down 5% and you're trading on a 4-hour chart, it lost some confirmation, yes, sell it. Just get rid of it. Don't water a weed. If it's an investment and the thesis on the company, it's a good company with good products, good earnings, and good management, then just continue to hold it. Just continue to hold it. And it hasn't gotten to the price below where you said you would sell. The key point is planning. Before you press that buy button, you've got to know the bottom. You've got to know the top. You've got to know where you want it to go. If it went there, then sell it. Asking a douche on the internet, what should I do? That's not a strategy. That is absolutely not a strategy. What I want to do is teach you to fish. I don't want to hand you the fish. I'll feed you for a day if I hand you the fish. I want to teach you to fish. And the biggest lesson you can learn is to have a plan in place before you put that buy button on. That's it. If you're going to do anything else, just make sure you have a plan. And if that plan comes to fruition, you've got to make sure that you take actions on that plan. Your thesis can change. The Qs, when it was here at 426 and we started to see it turn, I may have sold some here at 455 and gotten nervous. The algorithm didn't tell me to get out, but I saw some weakness. Then when I saw some strength, I could add back to it. Again, your thesis can change and maybe it didn't make all the money that I wanted to. Again, it can change. But if you're trading on a 5-minute candle, then you better do it. And one of the lessons that I've got in the education section today, and it seems like a good time, the lower the time frame, the weaker the signal. So a 5-minute candle isn't going to give you as good a direction as a 4-hour candle. It's a day candle, a daily, isn't going to give you the same as a weekly. So let's take a look at the 4-hour here. The Qs, they look super weak. It looks like you'd be buying. You're 6 points below the oscillator. Your RSI is coming off of oversold territory, down at 26. It's risen up to 36. You don't have confirmation. Price action always wins. I don't care what indicator you put on your charts, price action always wins. And you don't have confirmation above that 9-day. So it looks weak. Well, that's a 4-hour. Let's go and take a look at a weekly. Because again, this will tell us the direction of the market. It will tell us the cues. Where are we going? Well, the weekly, you're not looking super weak. It's still pretty strong. RSI is at 56. Back in April, it got down to 50. Never got below 50 in the last couple of months. Your MACD crossing down. You're 18 above your oscillator. Doesn't show weakness. Your 50-day moving positive. Your 200-day moving positive. Your Bollinger Bands wide open. You're below your 9-day. Again, 450 seems to be a support level that you want to take a look at. So again, if you're losing in this market and you bought something, say CrowdStrike. CrowdStrike's a perfect example. They came out, there was Delta came out and hired a legendary lawyer yesterday to try and sue CrowdStrike for the lost revenue that they had for some of the bet. It's more about press. This will go on for years. CrowdStrike is down. Let me see. It is down 3%. This was down as much as 7%. I still think the algorithm's going to get you in today, might get you out, doesn't have confirmation. But if we go to the weekly and we look at this thing, it still looks fairly strong. I mean, the RSI is at 39. The MACD quickly came down, but you lost what, 25, 30% in this one? That was a huge move down, but your 50-day is still moving positive. Your Bollinger Band's wide open, but your price action is on the wrong side. So if you buy something and it moves down, understand your time frame, understand why you bought it, what your upside is and what your downside is, and then you can and was it a trade or was it an investment? That will guide your thinking, and that's what you want to do. Right now, the market it's kind of not even telling us anything. I mean, there's weakness in the market. I went over my weekend newsletter. There's weakness in the Qs. There's strength in the Dow. There's strength in IWM. I went over it this weekend. So it all depends on your time frame. But why did I buy Microsoft? Well, take a look at the interesting chart. And it's not something where I'm saying, oh my God, you've got to buy into it. I already have a super, super strong position in this. I am simply doing this for the long term. Am I going to be upset if this goes down to 400? Probably not. I'll buy more. But am I upset at $430? No. And the reason is, if we go over here and we look at Microsoft, okay? Microsoft, and I took a look at this. This is the entire process of me buying. I went and looked at the charts, and then I went to Seeking Alpha and I looked at it. And I said, you know what? Seeking Alpha, they say it's a hold. Why did they say it's a hold? Well, it's the valuation. The valuation's expensive. And when you look at this, yeah, it's 36. And when you look at the PEG, still super high. The reason is because of their growth. They're growing at 13%. Could they grow more? Probably, but they're probably spending more. Then I went and looked at the Wall Street stuff. And I said, there's 57 analysts that cover this. 41 to have a strong buy rating. And when I looked at it, $498 price target, 16% upside. And then I went to the revisions and I said, what are they saying about this stock? What are these 50 kind of people saying? Well, 13 brought their earnings per share up. Earnings per share down 3. Revenue 13 up, 10 down. So they're expecting some type of issue with the revenue. Then I went over to Earnings Hub and I said, there's $2.93 expected. They reported $2.94. And 64 billion in revenue. They reported 61 billion. And we remember Google from last month, their cloud went up, but their spending also went up. And that their YouTube revenue went up. So there were some things that went in there. It just felt like the right time to buy it. It felt like the right time to buy it. And then, Dominic Chu came out ahead of mega cap earnings this week. Here's the implied moves. Apple up 4%, up or minus, I should say. Microsoft up or minus 5%. Amazon up or minus 7%. Meta up or not down 9%. Now, I already have a ton of Apple. Amazon is my number 2 position between Google and that one. It kind of flutters back and forth. I don't have enough Meta, but I've said it before, just buy Meta under 500. But Meta is not a platform that I am comfortable adding a ton in. And the reason I'm not comfortable adding a ton is, it's fairly expensive. But B, I just don't use it enough. I don't use Meta enough to actually say, okay, I'm going to go in there big. I've got a couple $100,000, $100. I don't know how much I have in Meta, but it's not a major player. I've got exposure in the Qs. I've got exposure in XLK. I've got exposure to it. I just don't own it outright for, a large portion. So I said, which one do I want to own more of? I said Microsoft. And so those implied moves were important for me to look at. So there's my Microsoft buy. There's what I went through. There's some education on that. Now, this decision by Stephanie Link to sell. She said why she sold. When she talks about, if you want to watch this video, I'll include it in the newsletter. The newsletter is, by the way, 100% free. Here's the newsletter. And yesterday, during the week, it's 100% free. It's the Super Bowl week of earnings. I said it yesterday. You can read this one for free. Sign up. Any of this stuff. It's all on Linktree. The link is down below. linktr.ee/daily stock pick. I got Trendspider there. You can get my 4-hour algorithm. You get everything that you want. Seeking Alpha. We'll go over that. But everything that you want. This is it. Now, this one will be in the newsletter today. And it's a great 4 minutes to watch. Stephanie Link goes over why she trimmed Apple. She tracks her portfolio to the S&P. And so when she says she's too overweight in Apple, Apple has come up so much in the past 2 months that her position in Apple has become larger than the S&P. She's comfortable holding it, but she doesn't want her portfolio to be larger. It's way too big a position in the portfolio for her to feel comfortable with that raise. Okay? There was a sell signal on Apple yesterday. Looks like further weakness. You've got some downside here. I pointed this out a couple of times. It doesn't look strong. Would I be adding to Apple? No. Am I trimming Apple? No. I do think that Apple probably comes down to 210. I'm not holding out that this is going to be a big pop on earnings, but I'm not necessarily doing anything with it. If I'm doing anything, I'm selling 1 or 2 shares in order to get my mind right in the fact that I can sell it. But she said it's just too big a percentage in her portfolio. So she's S&P market weighted. That's how she manages her portfolio. If a stock goes up, she tries to trim it back so that it's actually weighted like the S&P. And she doesn't track to the S&P. She gains those. Some of the losers she will actually add to when they're losing, but they're good companies. So she does just a masterful job of managing that portfolio. And I thought the clip just shows you exactly what it is. Now, Apple used Google's chips to train their AI models for Apple Intelligence. This is an interesting one. It might mean nothing to some people. I kind of read it as, hey, they bought some Google chips to train their models, or that's what they were in discussions with, I think, with Google about getting those chips. What's interesting about this is it might indicate big cap tech's lack of reliance on NVIDIA. NVIDIA is still the leader. Don't get me wrong. They're still paying for this. Apple is just doing it in a different way. But again, it might signal to others that, hey, if Apple, who's the big behemoth in the AI world, I mean, they turned AI into Apple Intelligence, this could signal a change in momentum there. So NVIDIA, take a look at it. It's down 0.7 today. It's at 111. I would say you buy it when it starts to turn. Right now, you're seeing a downturn in the 50-day on the 4-hour. The MACD is below that. I was buying up here at the 120 levels, I think, 122. It's broken down its support. I would be looking at that 200-day, which is at 105. If we are to see more weakness in this market from NVIDIA, if Microsoft comes out and says they didn't spend a ton, if Amazon comes out and says they didn't spend a ton, if Meta comes out and said they didn't spend as much as the previous quarter, NVIDIA is probably going to drop. And I think that's an opportunity to get into it, to actually start buying to it and add to it. The valuation, remember, chips are kind of in a cyclical pattern. So, they go up, they go down. Just look at 2022, how chips went down because of the, 2021, there was a supply chain shortage. And then we got all this flood of chips. And then there were double and triple orderings and they had a ton. So, interesting stuff. Take a look at it. I'm not selling NVIDIA. I'm looking to add more. AI roadmap. This was interesting because it went over how pushing earnings and the contrast between Apple and Google and what we can expect from some of these AI things. They went over how Apple, during the WWDC, pushed Apple Intelligence, and the stock shot up versus Google, which basically went over all of their legacy stuff and didn't push AI in their last earnings. And so we just saw what Apple did on the chart. Look at what Google's done since they reported. It's weak. It's gaining some strength back. If you want to add Google, I don't think this is a crazy time to add Google. You're obviously using that 200-day support. But again, you go to your time frame. It's still strong on the weekly. And the MACD is still what, 10 points above the oscillator. Now your RSI bounced off of, let's see, 52, and it's at 54 right now. This week of earnings, this is going to determine Google as well. So don't think that Google's done with it just because they've already reported. You don't have catalysts in the stock other than, maybe they do some pixel stuff or some AI stuff. But again, you want to take a look at that one. It's just an interesting one to play. And this article points it out that there's case in points. A stock can immediately benefit when following this prescription of using AI, especially for leaders. So, interesting stuff. Now, hedge funds. We're in the season of hedge funds where they're kind of releasing some of the stuff that they're doing. XLI, they're selling out of industrials, and they are actually adding to XLE and XLB. This is kind of a commodity rotation, and it's not small caps. It's not anything. This would indicate to me that some of these people think that we are going into a weak period, and to protect themselves, they're using XLE and XLB. That's kind of what it tells me. I don't know if that's kind of the way others view it. Just kind of tells me, hey, XLI, maybe it's done with. I mean, we can take a look at XLI. This one has had a great first half of the year. Ever since then, it's kind of just flattened out. I mean, it hasn't done anything. Question is that flattening out going to move it up, or is it going to move it down? Well, you had to buy at 121. It's at 126 right now. For any of these spider sectors, I would really look at the weekly, because that's going to tell you, okay, we got the Bollinger Band cinching up. You've got the price action above the 9-day, and you've got the MACD a little bit high, not super high compared to previous, but it looks like it's going to cross up. Now your RSI is at 64. It could use some cooling off, but again, does this mean that you want to get out of it? No. You don't sell into strength on a weekly. You sell into weakness on a weekly. And you're never going to time the top or the bottom on this. You can, but I will tell you, you're probably lucky. And if we look at XLE versus XLB, let's take a look at the 4-hour on the XLE, and you'll see. This one in 2022, I believe, or 2021, I forget which year, just had a legendary year. Now you're under the 200-day. Your 200-day is providing resistance right here at about 92. You're trading about 91. If we go and we look at the weekly on this spider sector, you're just trading sideways, and that $93, it's resistance. Your ultimate, resistance is 101. So trade between this 93 and 101 if you get up there. So that's what's interesting in that one. Now, XLB, I'm not an expert at XLB. I've never even owned XLB. But this is the material sector. And if we look at the 4-hour, you can see it's just trading sideways since what, April? I mean, it hasn't done anything. You got above the 200-day. Great. Fantastic. The buy was at 88. It's showing some weakness. But again, it's just traded sideways. Hold on one second. Penny, please stop. It's just the pool people. So here you can see the Bollinger Bands. They're cinching up. They're contracting. Price performance is on the upside. Now, my algorithm on XLB, it's fantastic. Over 24 months, you make 45%. Buying and holding makes you 20%. So you could do that on the 4-hour and just trade that 4-hour algorithm. As long as it trades sideways, it seems fine. So again, this article was interesting. Just kind of brought out some stuff. Now, I want to bring up Alpha Picks. I am not supposed to bring this up. But Alpha Picks, this is part of the portfolio, okay? This is Sprouts Farmers Market. They killed it. They are up 22%, okay? They killed it. If you want Alpha Picks, right here, okay? Third link right there. It'll take you to this page. This is the performance of Alpha Picks, 132% versus the S&P 46%. Sprouts Farmers Market is one I would never think to pick. And this one was an alpha pick. Let me see my notes. I want to get this right. On June 15th. Okay? You get one pick on the 1st. You get one on the 15th. I'm not supposed to bring this up because they don't want me to bring it up. But I'm bringing it up because of earnings. Not because it's an alpha pick. But I'm just telling you it was an alpha pick on June 15th. June 15th, ironically, was also a buy in the algorithm. 78.69. Since then, you're up 35%, probably even more. I mean, let's calculate this because the move today puts you up, 32%, 31%, somewhere around there. I mean, that is a fantastic return. How can you get picks like that? It's alpha picks. And I continually bring this up. Now, folks that, blame me for GCT and buying into GCT and losing money on that one, again, it's a portfolio. It's not every single one is not going to be a winner. But there are so many examples of fantastic, and it's a buy and hold strategy. That's the other thing. GCT 2 years from now, and we went over Marathon Oil, how that one was pulled out yesterday. You didn't win on Marathon Oil right away. You lost. Sprouts Farmers Market kind of trades sideways a little bit. Up here at 82, everybody thought, oh my God, should I buy it now? Well, yeah, they thought you should buy it. Let's see. I have had some not good luck with PayPal. I held on to this one, wound up losing a bunch of money on this one. They just posted great earnings. It's up 10%. PayPal, I mean, is this the start of the turnaround? Let's take a look at the chart. Because again, these guys, it will bounce on hype. And I think that CEO is known for hype. Remember how he said he was going to shock the world? And then said, well, we're in the middle of a turnaround. That's all he said. That was it. Algorithm had you out, got you in with a little gain, probably gets you back in today. Probably will get an alert tomorrow on this one. Weekly, it's still weak. It's still weak. Do you want to buy this one at 64? Well, I would say you're just trading sideways. I would wait for it to break out. To get to that 200-day, you have it at $131. Are you going to get back there? Probably not. The actual valuation of this is nuts compared to what they're doing. Now, they're turning it around because he's gotten them out of high-cost businesses, and he's looking at things that, the right way. Again, good management can take a hold of a good company and turn it around. That's what they can do. Good management makes a big difference. Do I believe in this company? Not enough to buy it. I mean, their profitability, they have a 38% margin. The sector is at 60%. This is transaction and payment services. I don't trust it. Fiserv is the number one. One that I saw yesterday that I really liked and the kind of logic around it was Affirm. Remember, Apple got out of the buy now, pay later stuff, and Affirm took that. They're up 7% today. Now, am I buying into this one? Probably not. But I like the logic around this was Apple got out of the buy now, pay later and just gave their business to Affirm. And so Affirm is taking to control of that. That's billions of dollars. Now, Affirm, the algorithm has you out. It doesn't have you in. It's up 10% today, 8-point-something%. It's probably going to get you in. But when you take a look at the weekly on this one, it doesn't look strong. And so I'd argue you want to trade this. You don't want to own it. But when you look at PayPal today up 7%, I sold it. I'm out. I don't typically look back. Now, one that is interesting is the difference between Merck and Pfizer. Pfizer is a beaten down stock, and we'll take a look at the chart. Okay, they announced earnings. They're up almost 1% on the thing. They beat and raised outlook. They're up almost 1%. We can take a look at the chart, and this is what beat and raise does for you. Is if your stock is beaten down, a beat and raise will help you. Okay. Doesn't take away the fact that they don't have a great market. Algorithm got you in at $28 here. Okay. You're at $30. That's a great gain. Now, do you want to get into this one? I'd argue the weekly is still showing it as a bit of a turnaround that has some strength, but you're trading at the top of the Bollinger Bands. You've got a ton of room up to 40 to that 200-day. Wait till the 50-day starts to turn positive. You have confirmation above it. You can buy it now if you wanted to. I think a beat and raise definitely looks good. Now, another one was Merck. Merck is one that beat and raised as well. Merck was down about 2%. I think they're down 6% now. They beat and raised. Now, I'm not a biopharma guy. I don't like biopharma. But when we take a look at this one, again, this one is into strength. So if you beat and raise, but it's not enough, and you've got a strong moving stock, they're going to kill you. And because it might not be enough. That's it. Right now, you don't want to buy Merck. Look at the Bollinger Bands. They're kind of cinched up. The price action was on the underday of the 9-day. It was turning down. Why would you buy it? For a hope of a turnaround? No, just wait for the earnings. So there are ways to play this. It's an example of where past performance can help indicate what the earnings need to do in order to move the stock higher. Pfizer. Now, yesterday, crypto. You're going to see a ton of volatility on crypto around the election. So Trump did his thing this weekend and said, I will instruct the Federal Reserve the government never to sell crypto. What did the government do? They sold the Silk Road crypto. So am I selling out of it? No. This is just politics at its best. It's basically, I continue to say, I think the Harris campaign is going to move more towards pro-crypto. There are probably 20 million people in this country who are single issue voters. And the single issue is crypto. So what do you want to do on crypto? Let's go and see Bitcoin. You can track Bitcoin here, just PTC. Bitcoin versus US dollars. I don't know how to do it on Trendspider. I've tried it there. I just don't. It's down 3%. Do you want to buy this? In my mind, I think you want to buy it. You want to buy MicroStrategy. Let's see. MSTR is down. MSTR is down. Let's say 1%. It's showing some strength into that selling of Bitcoin. Down 1%. Again, the government's out there. Now, the signs are here. Because what did we see yesterday? We saw Jim Cramer go bearish on Bitcoin. Buy, as he says. That's it. So let's be honest. The signs are there. I'm not selling my Bitcoin, my IBIT, my MicroStrategy. I am waiting for the algorithm to take over and tell me what to do. I want emotion out of that Bitcoin trade. And so I'm doing it with the 4-hour algorithm. MicroStrategy still has me in. 1396 still has me in, showing some weakness. It's going sideways. Bollinger Band cinching up. Let's see where the price action goes. Remember that 10-for-1 stock split. I think that's super bullish. Just my take on it. If you want this 4-hour algorithm, you can trade with it too. Go to Linktree right here, top one. You get over to Trendspider. Here it is, $53 a month. What you do is you sign up, then send me a screenshot of your actual account in email. And how do you get my email? Well, you go back to Linktree right here. And my email's right here. Send me a screenshot of your account. And then I'll send you the 4-hour algorithm, the 65-minute algorithm, the 5-minute algorithm, all my watch lists, all my scanners, everything that I do, I will send you. So that's how you get that. Let's talk about some education stuff and some quotes from Steve Burns. I really like this. The stock market isn't rational, and that's why so many people stay confused. It's not. That is a great quote. The stock market isn't rational. You can't play earnings. I bought Microsoft. Do I think they're going to beat and raise? I do, but I don't know. And even if they do, if they spend a ton of money like Google did, maybe the stock market goes down. It takes the price down. I don't know what it's going to do. It's not rational. Time frame, position size, fundamentals, price action. That's all you need to know. Adding to losers is not a good idea. Cutting winners or assuming that every time you enter a trade, it will be a winner is all about making the plan before you buy. If all of those things, if you add to your losers, dollar cost average on the way down, because your thesis is, and if it plays out over a year or two and it's still not proving to be, or you sell Microsoft to buy something else. I sold Microsoft early. I should have a ton more Microsoft. I sold it. Mistake for mine. Again, adding to winners. You want to add to your winners. Don't cut them. That's why I'm so reluctant to sell Apple, because I think it's a $250 stock. That's it. But that quote, the stock market isn't rational, and that's why so many people are confused. Don't make it confusing. Learn the charts. Learn your technicals. Learn about how price action does. How do you do that? Well, you go over here to the Daily Stock Pick newsletter. I've got a complete education section. I will tell you, you can absolutely read this entire thing in 7 days. You sign up for my paid newsletter, you can read the entire education in 7 days. Screenshot it if you want. I don't care. I give a free 7-day trial. That's it. That's it. I mean, that's how you can learn some of the fundamentals and some of the technicals that I actually use. I don't use anything that you don't see on this podcast. I use Trendspider to try and tell me the price action. I use Seeking Alpha Premium to tell me the fundamentals. I love those 5 gradings because I can quickly determine is a stock good or not with those 5 gradings and going in and looking at a couple of things, the PEG ratio, the PE ratio, the growth, the profitability. It's as simple as that. And I can go and look at, say you want, Meta. Okay, let's go and look at Meta because Meta's reporting tomorrow. Let's take a look at this. Is it expensive? Yes. I can tell right from this page from Seeking Alpha Premium that Seeking Alpha analysts say it's a buy, 3.86. This is a 5-point scale. Wall Street says it's a buy, 4.48. The quant says it's a hold. Now, the quant is what these factor grades do. Okay, valuation, growth, profitability, momentum, revisions. I value these things based on that list. Okay, valuation is first because ultimately, when you go to the store, are you buying the most expensive thing? No, you want something on sale. Well, the valuation is going to tell you what's on sale. What do I look at? I look at the PE. Is the PE higher than the sector? Yes, it's double the sector. PE is 26. What sector is this in? Communication services. The PE forward, it's double what the thing is. So it's expensive. Then factor in growth with the price earnings, and that's PEG ratio. And you get down there. PEG ratio under 1 is what Peter Lynch and Warren Buffett love to have because it's on sale. The trailing 12 months, you're under 1. The PEG ratio of forward, it's 1.16, but the sector's 1.41. So it's trading below that. So that's very good. Now, then you take a look at the growth. We can go and take a look at that. They're growing 21% revenue year over year. They're expected to grow 15% year over year. If they beat that forward and they raise and it's higher than 15% year over year, the stock will go up. This is a growth stock. Now you can look at the profitability. What's their profit margins? 80%. The sector is 50%. EBITDA margin, 39%. Okay, net income margin, 32%. The net income margin for the sector is 3%. This is an A+. Your momentum. How's the stock doing over 3, 6, 9 months and 1 year? It's all A's. 3 months, you're up 7%. 6 months, you're up 16%. The sector in 6 months is down 3%. The sector in 9 months is down 14%. The sector over 1 year, down 4%. 1 year, you're up 43%. It has run. And so this is a very simple thing. Then I go over here to Wall Street and I take a look at this and I say, ooh, their average price target is $532. Well, I take a look at the price versus actual price versus price target. They've chased it up. It has pulled down. What's the last time it pulled down? Well, the last time it pulled down was over here in April, and the price pulled down, but they didn't lower their price target. Nobody's lowering their price target. So we go over to revisions, and the revisions tell you what the estimates are for earnings per share and revenue. 20 up. 7 down, both for earnings per share and revenues. So when you go to ratings and we go over to, you want to make sure that there's enough people that are rating this one. 64 analysts cover this. 64 people, 43 say it's a strong buy. 12 say hold. And let's be honest, 12 say buy. Let's be honest. Buy means, hey, it could go either way. 6 say hold. And let's be honest, that's 6 and the 3 sell. Those are people that probably think that it's going to go down based on valuation, that Zuckerberg's just spending too much. So that's how you use Seeking Alpha Premium. If you want $25 off of Seeking Alpha Premium, right here, it's a free 7-day trial, just like my newsletter. And that's the second one. Okay, Alpha Picks, we went over Sprouts Farmers Market. That's this one. 132%. This is basically hand feeding you a portfolio. There's a couple of ways that you can do this when you join. You can either buy the portfolio. They give you the weighting in the portfolio. So like Stephanie Link says, hey, she's weighted to something. Seeking Alpha actually weights their portfolio as well. So you can see all of those weightings. It's an interesting one. Again, we talked about the weaker the time, the lower the time frame, the weaker the signal. That's determined trade or investment. Now, from Reddit, VSAT popped. This is from Disembodiment 11. VSAT popped up on my scanner. Bought it as a medium risk, short term, medium momentum trade. 3.45% stop loss. Thoughts? I love that you have a stop loss. I mean, again, I think this is the satellite. This is the one that's Viasat. Aren't they providing some type of satellite for AT&T, and that was the reason for the pop? I don't know. I mean, let's take a look at the algorithm. The algorithm got you in at 12, okay? You covered this gap. Again, once you saw that strength into this and that gap on earnings, you knew it was going to cover this. And now what are they expecting? They're not making money. I see that they're losing 46 cents per share. So when we look at the weekly, because we want to look at a longer term time frame, it is probably a losing stock. The 50-day moving negative. The 200-day moving negative. That MACD, while it's moving negative, just kind of flattening out. You're getting into oversold territory because when it gets this high, it typically pulls back. So I'd be a little bit worried about this one, Disembodiment. Let's go and look at Seeking Alpha Premium. If we go VSAT and we take a look at, it is a sell in the quant. And they're probably going to, alert us. Yeah, VSAT is at risk of performing badly. Why? This is why you have your stop loss. And it sounds like it's a trade, so you probably don't have to worry about it. The company has earnings per share forward long-term growth of minus 52%, while the information technology is 14%. Again, one of the other things about Seeking Alpha is, say you don't like this one. Well, you go in and you look at the top communication stocks. There's INSG. And this one, again, it's in the communications sector, communication equipment. Look at that one. You look at the valuation. This is a strong buy. Look at the valuation of this one. They're not making money. The growth, it's not great. Momentum, you got huge momentum on this one. So there's probably some news on this one. Now, this is probably a small cap stock, 113 million. Yeah, super, super small cap. So when you go over here to Wall Street, there's 3 analysts that cover it. They all say hold. Don't listen to them. I mean, that Wall Street price you can't take a look at and say, okay, there's 3 people and that's valuable. You can take a look at Seeking Alpha analysts. There's only 1 that covers it. So ignore this one. I would ignore this one as well. The quant rating is what you want to look at. The valuation, it's not bad. I mean, it's B, and it's because of their price to sales, because they'll probably do well. But that's how you use it. Now, VSAT, it's not my thing. Popped up on my scanner, bought it as a medium risk, short-term momentum play. I'd say trade it in the 65-minute. Let's see how the 65-minute does on Trendspider. This is a 65-minute algorithm that you get when you sign up. Let's see how this does. This loses you 17% versus 6%. But if you wanted to get into this, I would say that, that was a great buy because you had, even this one, you had strength and you were in a positive tense and you were covering this gap. That was a great play at 16 all the way up here. It got you out 11%. Doesn't have you back in. Showing some weakness in the 65. But again, the 4-hour is better in my mind than the 65 because the longer the time frame, the more confirmation that you have. So I like it. Don't love it. D-Man asked on YouTube, I'm curious on what makes a stock a buy and hold forever stock, like Costco to Buffett, and you sold it. Compare it to Apple. I guess I thought every stock can be sold, but it seems people have their top picks and foundations of where ETFs, whether it's ETF or Apple or Google or Microsoft. I guess my thinking is why Costco is not in the camp in your mind. You could have done the same thing with Apple. I'm looking for feedback. Forward to the feedback. I really haven't picked my piggy bank stocks yet. I'm thinking I should. Probably Microsoft or Google. I think either one would be fine, honestly. It just depends on where you're at. I wrote back that's probably worthy of an explanation tomorrow on Costco. So here's my thoughts on Costco. And this was why I sold it. And this would be why I would sell Apple as well. Costco. It is not, the price action looks weak in the short term. And when you look at the long term, it has had this huge run up. And why has it had this huge run up? I think it was just based on them expecting at some point in time over the last 12 months, they were expecting a membership increase. And so when that happened, I said it's time to get out, because remember, Costco's business model is really based on that membership. That membership price is what covers most of their stuff. So when I looked at this and I went into Seeking Alpha and I said the valuation is an F, okay? And the reason is the PE is 51. This is a consumer, a retail store. It's 51, okay? They're not growing. Their peg, their forward peg is 5. That's huge. So their growth, which is a C plus in here, doesn't mean that it's going to automatically go down. But when I went and looked at the peers and I said, okay, how do I value this against other retailers that are similar, meaning specifically Walmart and Target? And Target has its own issues. You can do Dollar General, BJ's, Dollar Tree. But when I go and I look at this valuation, again, when I go into the store, I don't want to buy the most expensive one unless I'm sure that most expensive one may appreciate in value. But when I looked at Costco and I said it's 50, where I can buy Walmart at 28, I can buy Target at 15, I can buy Dollar General at 16, I can buy BJ's Wholesale at 22, Dollar Tree at 15. Remember, Walmart includes Sam's Club. So they have a membership fee as well, service. Revenue growth year over year, Costco at 7%. The forward revenue growth, is 6%. It's still the top dog there as far as the revenue growth. Revenue growth 3-year, 10%. It's still the top dog. BJ's has 9%, and their PE is only 22. So when I looked at it, I said, okay, which one do I really want to own? And I said, Costco, I'll take that money. I'll invest it in Walmart. I can always buy back when Costco is showing some strength. And it doesn't mean that Walmart's necessarily showing strength, but look at that MACD on a weekly. Okay, it's up 50 points above the oscillator. The RSI is at 60. It's still oversold. When this one came down in 2022 and it was selling at under $500, under $400, $406, okay, May of 2022, it went to $406. That made sense to me. The RSI was at 31. The MACD had crossed down. Did it show strength? No. But if you wanted to buy it there, I wouldn't have said you're poor, because the valuation was fine. The valuation's extended. So what makes a stock? If Apple ever got to like 60 or 50 on their PE, and I could buy Google at 25, I'd put more money into Google. I'd put more money into there. You look at the PE on Apple, it's extended compared to its peers. It's 32. You can buy Dell at 15. You can buy SMCI at 29. It's definitely extended. But do I think that Apple has a better chance of actually growing their stock when they're buying billions and billions of dollars back? Yeah. I think the management is better, and I think the products are better. I don't have a Costco membership. My parents do. So what makes it a buy and hold in my mind? It's all different for everybody. It's 100% different for every person. Not only do you have a different risk tolerance than me, you have a different eye than me. You have a different taste than I do. You may have an Android phone. You may have a Samsung watch. You may have a Windows PC. I don't. There's not one thing that's Microsoft Windows in this house. But I still love Microsoft. You know why? Because I love Copilot. So I buy and hold that one simply for the fact that I think Microsoft is just embedded in everybody's life. So that's it. I mean, there's nothing more than I can say about that. It's all personal. It's all opinion. We're all just trying to do our best. That's why you shouldn't follow anybody on the internet. You shouldn't follow gospel about what I say. What I'm trying to do is teach you to fish, not hand you the fish. So your portfolio should not look like mine. Simple as that. Scans. Let's talk about some of the core portfolio stocks that look bullish. Disney. Interesting. Not something I'm buying more into. I just don't think, again, it's an expensive stock, but the algorithm makes you 5% versus losing 10% over 2 years. Not a bad one. I'd say, you want to buy this one under 100 and it'll pop to over 100. At some point in time, it'll pop over 100. Do I think this is the earnings where it pops over 100? No. August 6th are their earnings. Now, speaking of earnings, I did say yesterday, I think Amazon's still the best buy. I think they get a nice pop, and we have an algorithm buy. 183 yesterday. It's trading at 183.47, cheaper than you could have bought it on the algorithm yesterday. It's up a little bit today. They have earnings coming up Thursday. I think this is the best buy in the sit. Now, do I think that it's going to pop to $250 after their earnings? No. Do I think it's going to hit this 188? The implied move on this one is what? 9%? Let me see. The implied move on Amazon is 7.8%. So it's going to be super volatile. It's a good one. We got another earnings that are coming out tomorrow, I think. Meta. Got another buy. You know, again, it showed weakness. Bollinger Band cinched up. Do you have confirmation? Not really. 465.80. MACD's low. I think you can add it here. Algorithm makes you 118%, so it's nothing to sneeze at over 2 years. Buying and holding makes you 171%. You take a look at the weekly. It's still got some room to go down. So buying it here doesn't guarantee you that, oh my God, I'm going to make money because the 4-hour told me to buy. No, you might have more room down because you still have room to go down to the oscillator. Look at this during 2022. You know, did you buy here at $96 when it was under 100? Why not? The valuation was there. You know, we were, this was obvious to buy at 100. I was screaming, buy it under 100. I think I had a bunch that was bought under 100. I sold here. Again, my mistake. I wanted to, this was weak. Did I buy back in? No. This golden cross right here where it's selling at 339, great buy. Great buy on the weekly. So another one, GCT. We just went over that one. This is one that is an alpha pick. I bought it. It's out there that I bought it because it's an alpha pick. They're long-term buy and hold. They may get rid of it. Again, they sold my Marathon Oil. So we can take a look at the weekly on this one. This may still have room to go down. The weekly is still super strong. It's kind of traded sideways. Valuation is still there. They have earnings coming out on August 12th. Still good. So if you want any of these, I will tell you it's free in the newsletter today. So I'll post this after I get off the air and post all of this stuff. But if you have any questions, hit me up. Again, I'm on Spaces today at 3 o'clock. If you're interested, I will not be doing a podcast tomorrow. I will not be doing a podcast on Thursday unless time allows for it. So if you have any questions, hit me up. It's all here on Linktree. And if you make money on earnings because, I gave you a tip or something, Venmo me, PayPal, Cash App. It's appreciated. Or just sign up for the paid newsletter. That's what I'm telling people, is sign up for the paid newsletter because that supports me as well. And it gets you something. So rather than tipping me, just sign up for the paid newsletter. The paid newsletter is, $40 a month. Sign up for a month or two. And you'll be able to read all that stuff. Again, it's good. So if you have any questions, hit me up. Okay, I will talk to you guys maybe next week. So take care. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.